Deflation is happening right now inside of China, and that has a direct impact on the United States. I'm going to show you that today. There's one statistic specifically that's called the China Credit Impulse that I want to explain in detail so that you understand exactly why something happening on the other side of the world directly affects what you experience at home. So we're going to look at that. I've got a lot to cover today. We're going to cover these inflation and deflation aspects that will be important for you. And of course, we're going to look at what you need to pay attention to specifically. Perhaps you're an investor. Perhaps you just want to be cautious and understand this, the financial education at a deeper level. I'm going to give you that right here. We are starting with the inflationary and deflationary factors. This happens to be China's CPI, that's consumer prices, and PPI, those are the producer prices. So there are three things that I need to note right here front and center for this video, and that is inflation indicators are down. They're down, and they've been down for quite a while, in fact. Export prices are down as well. Why are they down? Well, it's pretty clear that if you don't have enough customers, you got to bring your prices down. You got to do a Walmart rollback in order to get those products to fly off the shelf. And you also have inventories that are up. All of these things, of course, they're connected. Inventories, what's going on? Why would inventories be up? Are they producing too much, or has the demand for the rest of the world slowed down? That's what this is all about. It's not necessarily a problem with China. They're producing, and then Lululemon says, we don't need, 2 million pairs of pants. We're good with just 1 million pair of pants. China's been producing, and now we have too much stuff. And so that's another issue, because then they got to start dropping their prices. Their margins get real thin. They maybe start laying people off. The economy slows down. And then you have that being a driving factor globally. How? How could that be? I'll explain. Here we have it. China's PPI lays the path for U.S. consumer inflation. And I want to explain this really quickly. I think it's pretty obvious that if you have something in China that's being produced and those raw materials needed to make that, let's just say it's a t-shirt, you got cotton in this t-shirt. Well, that cotton is starting to cost more money. Let's just say it's twice as much. The production cost of this t-shirt, 2 times as much. Well, now we're going to sell it to our customer in the United States, and we're going to charge a higher price. So, of course, that means you've got to pay more, even though it's on the other side of the world. Now, that is, the direct correlation. It works in the opposite direction. So if the producer prices are starting to fall, that means they're potentially going to charge their customers less. But it's never exactly the case, especially on the deflationary side, because they say, oh, no, we can't because of this or that. I know in my circumstance, prices just keep going up. Okay, that's the way I see it. What do you see? Do you see some deflation? Let me know where you see deflation if you do. Put it in the comments below. Where is that deflation coming in? This is the China Credit Impulse. We're looking specifically at the blue line. And this chart goes all the way back. But if you focus on the fact that the initial expectation, like the surge in 2020, if I put the mouse over this area in here was the surge for 2020. Everything got wacky. Then it started coming down, and it was a sudden drop of, I should explain what the China Credit Impulse is. Basically, what you're looking at is the total amount of loans compared to the size of the economy, the GDP. How many loans are taking place? A lot of loans? Less loans? What's the deal? That's what the China Credit Impulse is telling us. And then if there are a lot of loans, that then translates over into the United States, where basically it's an increase of liquidity. What's happening? Is the business moving? Is the economy moving? That then signals a few months down the road what happens in the United States. Believe it or not, this is an extremely accurate indicator. So over these last couple months in China, we have seen the credit impulse declining, and it's been pretty stagnant over the last several months. But here we can see most recently it has been in a downward trend. Now it's at this area where it's been, where I would consider it to be what China puts in as the floor for the last several years. So how much further can it go down? Doesn't look like much, but all I'm trying to highlight is the fact that this is still in a deflationary zone. Okay, China credit impulse. China's export prices see the biggest drop in a decade. Falling demand, commodity deflation, and high inventories lead to price cuts. You can see the big driver of low prices this year is the buildup of inventories over the last few years. During a burst of optimism, oh yes, everything was fantastic, and then suddenly, not so much. The demand just was not there. All right? So businesses trying to get rid of their stock, but they're struggling to do so in many cases. Now let's talk about something very important, and that is China versus the world. What am I talking about? Well, specifically when China wants to do something and the US doesn't like it, they can sanction them, they could restrict them, they could do all these things. But if China is able to produce more of its own goods, if it doesn't require the United States for its financial system, so on and so forth, well then the effects of any sort of restriction from the United States will be muted. It will be, less powerful. And so what we're looking at right here is Chinese-made vehicles are actually now surpassing other brands. So imagine this. You're trying to do your best to keep a lid on the growth of China, knowing, hey, they're coming up. So you do all these things, but what China is trying to do is grow beyond that and produce a lot domestically. They've now done that with their vehicles, all right? So you could see the sanctions and restrictions will have a less impact as a result of this. Well, let's get into it. In the first half of this year, Mazda sold roughly half of the number of vehicles in China that it sold in the same period last year. They want to do more electric cars, saying that that's the demand in China right now. And looking at these other brands, they're talking about, Japanese brands, just saying they're losing out to the domestic production. And that's an obvious fact. Right now, they're pushing for it. The government side, businesses, they're all going for China. But it's not just like for domestic consumption, because a lot of the cars produced in China are now going to Europe. They're going to other places. And if they want what they'll consider to be roughly, like when you look at electric cars, there's only a few parts. It's a battery, you got 4 wheels, and for a lot of these manufacturers, it's going to be basically the same exact thing. So getting a car from China will be no difference than, getting your other vehicles. And so that's what's happening right now. And potentially for Europe, at least, the competition is really there, because you get these really small vehicles. They're all about gas conservation. And now with electric vehicles, we'll see. I don't know if Europe is going to be as big of a taker on that. Time will tell. Looking at the main drivers of China's economic miracle. 1 billion strong population provides an abundant workforce and the ability to achieve massive economies of scale. A late start on development means a lot of easy wins by absorbing technologies in widespread use in more advanced economies. China's policymakers have also played their hand well. They've coaxed the U.S. companies to share intellectual property as a condition for market access. There has been so much back and forth between China and the U.S. And of course, this is something that is not going to go away tomorrow. You've got to understand this in depth, okay? What's happening geopolitically, there's so much. And that, I think, is a big concern overall. I would be cautious, to say the least. So back in 2014, Obama complained that China was a free rider, saying, in terms of the Middle East and what's happening, that they're providing security. China's not doing that. The U.S. has to front all the money. U.S. is doing all these things, and China is simply able to get the benefits of all of that. At the bottom, it says, China's position is that its interests in the region do not conflict with America's. I'm not so sure that every party agrees with that, but that's the case for today. What can you do as the individual? Like, you're looking at this circumstance yourself, you're wondering, okay, well, China this, China that, credit impulse. What can I do? I've written down a couple points here. Number one, you've got to wait for stimulus to put money in because you want to see that China credit impulse start to rise. You want to look at potentially, it's in August right now, where the government basically says, we're going to support this market, we're going to support that market. Very, very big stuff. Looking at semiconductors and the geopolitical aspects. You want to see what's going on with semiconductors because, yeah, China can produce vehicles, but can they produce all the semiconductors? I'm not so sure. What about cell phones? What about laptops? What about all these different things? They're reliant on those semiconductors that are coming from Taiwan and technologies that are coming from other countries. And of course, they're trying to do what they can to, restrict all the metals and things. But they've got to do some serious things if they want to actually have such an impact, and then that will disrupt themselves. So it's definitely a fine balance. So watch that. I'll cover that on the channel as always. And real estate, specifically Country Garden, I covered this in the previous video. Country Garden is actually, in terms of the amount, this is a real estate company, in the amount of current projects that it has, it's bigger than Evergrande. Bigger than Evergrande. This company has not paid back the debt that they took out. Okay, so they're basically defaulting on their debt. They've done this. We'll see if they pay within the grace period, 30-day grace period. But that's the circumstance they're in. That has to be resolved in order to see some sort of, okay, we're good. Now it's time to put money in. Until then, watch out when it comes, even the tech companies in China, watch out what's going on with China. And there's a lot of involvement. You think you're in a US company, but watch their involvement with China. Big stuff. Okay, and then we have this comment of the day. So, inflation is up, quote, only 3.5% year over year. People forget the 9% last year. So inflation is up 13% over 2 years. This was from Weed the People. Thank you very much for that comment. I think it's important that we look at inflation in a very realistic manner. And that is, you got to realize it's still up. We didn't erase the previous year's inflation. Let's be honest. All right. If you want more of this type of information, the real deal, you want to join over 1,000 people in the Money GPS community, totally free. I'm in there every single day on Discord. Please join me. Link is in the description. You can reach out to me directly through there so we can have a conversation, share things. It's all on Discord. Hit that link down below, and I'll see you there.